Money.
I got my guest jamming out in the studio here today, some money chat. This is actually going to be a good one. We're going to talk about preparing for 2016 tax changes. So I know we're a year out, but you really want to start thinking about what's going to come up in 2016. You don't want to be preparing for 2016 when you're preparing your taxes in 2017. Now, before we do that, I do want to talk to you about this year. It's April 18th is when taxes are due. The Washington, D.C. holiday of Emancipation Day is on Friday, April 15th. So under federal law, the tax deadline gets extended when it falls on a holiday or a weekend. So the tax deadline for most taxpayers will be the following Monday, which is April 18th. So let's go ahead and go into 2016 and the tax changes and things to watch for your filed taxes in 2017. Tax penalties related to the Obamacare are going up again. The Affordable Care Act imposed penalties for those not having qualified health care coverage. Those penalties started at $95 per adult or 1% of the income above the filing threshold in 2014. They rose in $285 per adult or 2% of income above the filing limit in 2015. Now, 2016's penalties will rise again, hitting $695 per adult or 2.5% of income. A family maximum will apply a per person amount, but the $2,085 amount will be substantially higher than the $975 in 2015 and surely the $285 in 2014. Also, itemized deductions. The limitation on itemized deductions for 2016 kicks into at an income of $259,400 for singles and $311,300 for married joint filers. Let's talk about foreign income. If you have foreign income, the foreign earned income exclusion rises to $101,300 in 2016 from $100,800 in 2015. Now, tax brackets rising slightly. Most of tax brackets that the govern direct classes of taxpayers are adjusted from inflation. So for 2016, these bracket amounts are rising by roughly 0.4%. Now, standard deductions are going up for head of the household filers. The low inflation rate kept standard deductions for most taxpayers steady in 2016 from 2015 levels, including a single married filing jointly and married filing separately statuses. For those who qualify as head of the household, the standard deduction will rise just $50 to $9,300 in 2016. Personal exemptions are rising. The personal exemption that taxpayers are entitled to take on their taxes returns will go up from $50 in 2016. That will give everyone an exemption amount of $4,050. Now, contribution limits on health savings accounts are going up as well. Health savings accounts let people with high deductible health plans set money aside on pre-tax basis to cover the cost of their own health care. For 2016, the contribution limit for individual policies will remain at $3,350, but the maximum contribution for families' policies will rise by $100 to $6,750. Catch-up contribution of $1,000 for those 55 or older will continue to apply. Now, let's talk about the earned income credit is rising as well. The maximum allowed earned income credit will go up modestly for 2016 for those with 3 or more qualifying children. The maximum credit will rise to $6,269, up $27. Those who have 2 children will get a maximum $5,572, which is up $24 for 2015, while one-child families can get up to $3,373, $14 more than last year. Now, those without children get just a $3 bump. Need to go out there and have some babies or buy a house. Will help you out a little bit in 2016. Now, the exemption from AMT is higher. The alternative minimum tax has struck a growing number of taxpayers, making the exemption amount more important than ever. Single taxpayers will see their AMT exemptions go up $3,000 in 2016 to $59,900, while joint filers will see $500 boost to $83,800. The estate tax exemption is heading upwards. A lifetime exemption amount for gift and estate taxes is tied to inflation, and it is slated to rise next year as well. The exemption amount will rise to $5.45 million, up $20,000 from 2014, and the limit applies to estates of those who do pass away this year in 2016. Other tax provisions could change, and when it's renewed nearly every year, lawmakers wait until the last minute. Go figure. To renew popular tax brackets such as charitable deductions from the IRAs, state tax deductions, teachers' write-offs from classroom supplies, deductions and private mortgage insurance, my arena, which, by the way, you've heard me talk about mortgage insurance a couple weeks ago on Money Chat. So if you did not catch that show, definitely go back to the podcast. But mortgage insurance is now a write-off again. As early as December, these provisions haven't yet been renewed for 2015, but typically lawmakers renew them retroactive. Makes it confusing, but it is retroactive to beginning of the year. The same is likely for 2016 unless the extensions provide for 2 years of the relief rather than just one. So many things are not changing. Many other typical annual changes aren't happening. Contributions, limits for 401k plans, IRAs, flexible spending arrangements are staying the same in 2016 as they did stay the same in 2015, reflecting a minimum amount of inflation in the economy. Moves people put off tax planning to the last minute, but knowing about these coming changes that are going to be taking effect can really help you plan for 2016 and really strategize for what you do. So that's why I wanted to talk about preparation. That is really what the show is about, why it's called the Money Hour, is to make sure that you have the best information from all the experts in anything regarding your financing so you can have a better quality of life for you and most importantly for your family as well. Coming up next on the Money Hour, novelist, speaker, and storyteller. He and his wife are traveling around the world, one couple's formula to rove the world at 55. Yes, the show is about money. Take a little bit different spin on it, because if we have money, we can travel and enjoy our life. Dennis Brooke, World Rovers, right here at 11:50 a.m. KKNW after the short break.